Hey traders, thank you for joining me. This is Ben Letto. Let's take a look at LettoChannels, at some action that we had in the last couple of hours. We can even take a look at yesterday as well. Let's hop right into the charts. All right, so this is LettoChannels. It's running on the micro NASDAQ here. We had one failed signal right here at about 7:30 in the morning. Good news is there is no other signal outside of this oversold region, so we're happy there. If we go back though, however, to yesterday, we had some really good setups occur right here in LettoChannels. We had a little bit of a scalp opportunity at about, well, early in the evening, 1940. Took another scalp opportunity here in later, about 2020 in the evening yesterday. Now this is on the 4th of February. Great move. So if you're an Asian session trader, be a great time for you to take a look at this. So going short here, we went rail to rail. Now that's a pretty nice move. Let's see how many ticks are involved with that. It is a 568 tick move, so that's pretty sizable. Go back to the midline. That's a good trade if we went long here at that point. Go long here. We didn't quite hit the midline. Here we did, however, this trade went nice into now this is about 23:30 Eastern time. These are all Eastern times. Let's go ahead and take a look now at the NASDAQ natural gas. Good setups here in nat gas. Let's see if anything occurred yesterday. We had a little buy here. Kind of was weakening though. That was at 4:30 on the. Oh, this is this morning. 4:30 this morning. This occurred right here at 21:20 Eastern Time. Here we go into yesterday's trading. Some of this radical volatility here that's been seen in nat gas. Really nice trade that came along yesterday at too early in the morning. So if you're trading the European session, you'd be trading nat gas from here to here. That's a move of 90 ticks, $900 in nat gas. We didn't quite reach the overbought level here because the volatility was just crazy the last couple of days. We did get this trade, which is pretty attractive on the 4th at 21.19. Good move up here. And then have another good move here. Now this was this morning at 4:38. Nice rail-to-rail trade here. So that's a 74 tick move. I could see if you wanted to trail your stop and perhaps got stopped out here, so that's not too exciting. Got some two good moves right here. So beautiful trades coming off of these levels. And actually, honestly, this one here, the stop would have been at that red line at that time, and we did not hit the stop. So still would have been a good trade. Only risking 190 bucks to pull in the 740, so it's good to reward the risk ratio. If we go short here, you do get stopped out. The risk is small, $70, so going short here would have stopped you out at that time. But right here is a beautiful trade. This one would have pulled in 350. The risk would have been up to that red line here. So 190 risk, 350 gain. If you go short again, or you stayed short, you're at 470 there to hit that target. So some really good opportunities there. Let's take a look. I've added a feature to LettoChannels, which is these rectangles, these entry rectangles here. They are printing from the rectangles you see here. So this is a 3-tick, $30 risk. It's a 8-tick, $80 risk triangle. So what those do is they give us context into the entry chart. So here it is, the 3-tick rectangle and the 8-tick rectangle. Now, what I recommend is once we break out of that rectangle and we retrace back to it, we go short right at this point. You'd go short right here. You'd risk to the high of that rectangle. So that's $170 risk. We're short from here. and you could at least break an even, so it's 240 at least to that point. I increased the font size on this, guys. I hope you don't mind. It certainly helps to visualize it a little bit clearer for you. Now here's another example. So the second tick here, which is the 8-tick box, we broke out of the low of that box down here, but we retraced up to it. However, the rule is to go short when we hit this level. That would have been here. You would have put your stop up here. So that's a 19-tick stop. And you certainly could have held on to that for 470 reward. The target level I would have put right here. The low is about 3.514. Let's see where that is here. 3.514 is right here. So certainly hit our target. 514 right there. Would have hit our target. So good job on that. 340 pulled in off of a 190 risk. Let's move on to the ES. ES is a little bit like the NASDAQ. Not much there today. Pretty good overnight trade. Well, in the early morning today, 4 o'clock. Let's take a look at this on our entry chart. Let's go back to time to about 4. So here are those two rectangles. We had an 18-tick risk here that you probably would have gotten stopped out. So if you went long on a breakout right here, you would have hit the low volume node on profiles. So you could have, it would have been a double top. That would have been an interesting signal. I would have gone break even had I hit that, right? Go break even there. The risk though, if you did take a full risk, was 237 down to the bottom of the green box. Now here's an entry that would have worked out lovely. So again, the green box forms, we look for a breakout above it. And really this or this would have qualified. So the breakout here would have gone long. Our risk would have been down to this area. I think you probably should have gone down to there. So 225 risk. And our reward to the other side of the channel here was a nice 787. It's pretty healthy. Now, really, if you wanted to get out at the midline of a price here at the high, it is roughly 69.10. 69.10 gets us down to 69.10 is right there. So that would have been at least the target, again, to the midline. I like to target the midline here. This, in this case, is it's a rolling VWAP. So it's a VWAP line. It's a 3-hour VWAP, basically. Think of it that way. It doesn't look at the whole session. It just looks at the last 3 hours and calculates the VWAP for that 3 hours. Now gold, let's move to gold here. Gold had a good setup early in the morning here at, 8:07. Looking pretty sharp. I would not have taken this long in gold because we're right at the VWAP line. You need some distance because the target can't be right there. So these two I would not have taken. This one could have been considered, but again, you're right at the VWAP. Here's a little bit of space between you and the VWAP, and then here's a little bit of space. Looks like we might have really nicked it. Here is our trade entries. Good entry here, gone long on a breakout above the green rectangle. Would have a possibility of $423. Now this is micro gold. Gold has just been crazy. So we're risking 165 to pull into 423. Here is another possible entry going a little tighter. This again was a move down. I'd like to go on a breakout above that swing, so would have been at least a break-even trade. This is a big risk. So 179 and optimally you would have got 134. I would have probably gone at least break even on a move up like that, right? So these are all theoretical trades I did, guys. I did not trade these today. Here is, well, I don't think it'd be a stop out because we didn't enter it until we broke this high. So once we hit that right there, the risk would have been 106 in the micro gold. We ran into some congestion here right at the predicted low volume node area. So at least breaking even, moving to break even or trailing a little bit would have got you there. Here's a trade that's setting up. Now this is a little bit old here. I would probably break out by right here and then see where it goes. All right, copper. Copper is still at the $5.80 mark, roughly. Some big expensive expensive metal. But here's a really good setup in our trade triangles approach. This would have been a loss. We would have gone long right at the high here and been stopped out for a loss of 300. Here, you call it, I probably would have been shooting for a breakout here, right? So there's no trade there. We never hit that entry. Here's a group of buy signals down here now. First one is telling us this green box here, which is 11 ticks, we really don't see a break. This would have been the buy level. So the buy level didn't get hit until here, which is clear sailing. We have another buy setup that occurred right here. Now this level, this is the swing high that broke out above that level. So we would have gotten filled, probably gotten filled right here. Taking that time, now we did not actually hit the low of the move. So that had been a $300 risk that we never touched. Just came very close. But if you had gone long there, you would have had nothing but upside. If you waited, now here's another setup. This box, a 21 tick box. Looking for a breakout of that box, you could have either gone long at a double top or let's go, at a double top here. The stop is the bottom of that box. So you're risking 375, never gets hit. The stop never gets hit. So if you're in early, now you're looking on sitting on some pretty significant profits right now. Let's see, where does this market end up going? So we're oscillating back and forth. If you're shooting for the other side of the range, then you're shooting for, it's going to be right here, guys. So we're close to that target. Now this is the other side of the range. We're just, you see volatility contracting here. All right, well, guys, I walked through the markets. If you have any question or want to see a market of your own interest, yeah, I would love to chat with you. So drop me an email, ben@sbgtradingcorp.com. You'll always reach me there. If not, guys, I wish you all the best in your trading. God bless you. It's a tough business. You got to stay nimble. You got to manage your risk. You got to keep your stop in place. And you got to get out at a reasonable level. You get those together, get them all straight. Your entries, your stops, your targets, and this market and this business will open up a world of opportunity for you. All right, God bless you all, and I wish you a good day.